There's a number in your head right now. You didn't choose to think of it. This video did that to you. Maybe it's your 401k balance. Maybe it's what your house would sell for. Maybe it's something uglier. What's left after you subtract what you still owe? Whatever it is, you're about to measure it against people your age, whether you want to or not. Here's what you don't know yet: whether that number even means what you think it means. So let's actually take the test. Not a quiz with a score at the end, a real one. The kind where the obvious answer might be wrong. Start simple. Under $100,000 in net worth at 60-something sounds like a warning sign. Sometimes it is. But hold that number for a second and ask yourself something else. What else is true about your life right now? There are retirees in that range with a paid-off car, no mortgage, a modest pension, and Social Security they qualify for, who spend less in a year than some people spend recovering from one bad month. Their number looks small. It doesn't feel small to them. Now move up. $250,000. If that's closer to your number, stop there for a second. What is it actually made of? Two people can land on that exact figure and be standing on completely different ground. One built it slowly in an IRA, sitting in index funds for 30 years. The other has almost none of it liquid. A stake in a small business or equity in a home in a state where property taxes alone take a real bite out of retirement income. Same number on paper, different footing underneath it. $500,000. This is supposed to feel like the finish line. For a lot of people watching this, the number they've been chasing since their 30s. If it's yours, ask the question that actually matters. How much of that $500,000 could you get your hands on next month if you needed to? That's Frank's question too. Frank is 68. He and his wife bought their house outside Columbus in 1994 for a little under $130,000. It's worth close to $400,000 now. Add a small IRA and an old pension from the plant where he worked for 31 years, and Frank's net worth clears $500,000 comfortably. On paper, Frank passed. But Frank can't spend his house, not without selling it, moving somewhere cheaper, or borrowing against it and paying that back with interest on a fixed income at 68. His pension covers roughly half his monthly expenses. Social Security covers most of the rest. What's actually sitting in an account he can touch without a major life decision attached to it is a lot smaller than $500,000. If his wife needs a procedure Medicare doesn't fully cover, or the roof finally gives out, Frank finds out fast how much of that number was never really his to spend. Now meet Linda. Her net worth is less than half of Frank's, a little over $200,000. She rents, no house, no pension, but almost every dollar she has is liquid, a mix of retirement accounts and a brokerage account she built herself. No debt, low expenses, a Social Security check that, combined with her own withdrawals, covers her life without stretching. On the test as most people take it, net worth alone, Frank wins by a wide margin. In practice, Linda might be the one sleeping better. Ask yourself honestly which situation sounds more like yours, not which number is bigger. Which one actually holds up? That's the real test underneath the title, and it doesn't stop at $500,000. It keeps going, even past $1 million. $1 million net worth used to be shorthand for made it. If that's your number, or the one you're aiming for, ask the next layer of the question. $1 million where? $1 million sitting entirely in a traditional 401k isn't the same as $1 million spread across a Roth IRA, a brokerage account, and cash. Withdrawals from traditional 401ks and IRAs are generally taxed as ordinary income, while qualified withdrawals from a Roth can be treated very differently. Two people, same million, meaningfully different amount they actually get to keep. So if net worth alone doesn't settle it, what does? Start with what the number is made of. Home equity is real wealth, but it's the least flexible kind there is. Federal Reserve data shows home equity makes up a large share of net worth for a great many older American households, which means plenty of people who look secure on paper are, in practical terms, house rich and cash poor. If a large share of your number is your house, that's worth sitting with for a moment. And once you know what it's made of, the next question follows on its own. What do you still owe against it?
Someone who's 68 with a paid-off house often needs meaningfully less income than someone the same age still carrying a mortgage. The Consumer Financial Protection Bureau has noted a rise in older Americans carrying mortgage debt into retirement, something far less common for the generation before them. Debt doesn't just lower your net worth on paper. It decides how many of your monthly dollars are already spoken for before you spend a single one on your actual life. Which raises the question of what's coming in every month regardless of what the market does. A pension, if you have one, Social Security for those who qualify. These matter more than most people give them credit for because they're the floor underneath everything else. Someone with a modest net worth but solid guaranteed income can often be steadier than someone with several times that net worth, depending entirely on markets cooperating for the next 20 years. How much of your monthly life is guaranteed, and how much depends on something you don't control?
And then there's the piece almost nobody wants to think about: how long this needs to last and what health throws at you along the way. Medicare covers a great deal. It doesn't cover everything, and long-term care in particular remains one of the largest unplanned expenses many retirees face, according to research from the Employee Benefit Research Institute. A net worth that looks more than sufficient at 68 can look thin at 82 if a major health event wasn't priced in. Have you actually planned for 30 years or quietly assumed 20? Put those questions next to your own number, and the number stops being an answer. It becomes a starting point.
This is why the ranges people build entire retirement checklists around. 100,000 here, 500,000 there, 1 million as the supposed finish line, were never the real test to begin with. They're a rough sketch, useful for comparison, not a verdict. Nobody fails retirement at a specific dollar amount, and nobody automatically passes at another one either. So here's the actual test, the one underneath the one that got you to click. It was never, is your number big enough? It's whether what you have, the house, the accounts, the pension, the debt, the health coverage, the years still ahead of you, actually works together to support the life you want to live. Not the life a headline assumes you want. Not Frank's life, not Linda's, yours.
You didn't come here to find out if you're rich. You came here to find out if you're okay. Those turn out to be two different questions, and only one of them can actually be answered by a number on a screen. The other one takes a closer look at what you have, what you owe, what's guaranteed, and how long it all needs to hold. Some of you already know it holds. Some of you just realized it's time to go check. If this helped you look at your own situation a little more clearly, consider subscribing. It helps more people find videos like this when they need them.